Brandon Rearick with EXP. I created this because the conversation I've had with a lot of potential clients, other agents who are friends of mine, one of the biggest sticking points that I think that the real estate market is dealing with right now is a lot of current homeowners that took out, whether they purchased, refinanced 5, 6, 7 years ago, have a low interest rate. And a lot of the feedback and a lot of communication and dialogue that I've had with people is, why should I sell? I have an extremely low mortgage rate. I don't want to lose that. And as a former mortgage lender, I absolutely understand that and get that. But one day I was just sitting there thinking, obviously, if you've been in that house for so long with the low interest rate, you've been putting more towards principal. So your principal buy down has been very strong, along with the appreciation in the value of your home. Now, this is just an example. It's not specific. It can vary not only by state, city, town, but also by neighborhood. And within a certain neighborhood, different style homes, different elevations, ranch style homes, 2-story, whatever it would be. So my thought is, if you are a homeowner that has that low mortgage rate and maybe you need to move or you want to move, maybe you have another child, maybe you're ready to expand your home size, maybe you want to downsize, and you're stuck on this numerical point that you have a low rate. And so what I started to do was some data research. Being a former numbers guy, I'm still a geek when it comes to that kind of stuff. And it's a matter of actually looking to see where your position is with not only the estimated value of your home, but what you've paid down towards principal. And so with the example that I've come up with here in Colorado, like I said, it's different. So talk to your agent or any agent, just see if this makes fiduciary sense, financial sense for you and your family, and how that lays out. So what I did is, say you bought a house for $550,000 back in 2020, 2019, 2018 with 3.25% interest rate. Because you've been putting more money towards your principal, your current, and you buy it for $550,000, you put down $110,000. Obviously you don't want mortgage insurance. And so your original loan balance is $440,000. As you've been paying your principal down with the low interest rate, that balance is somewhere around $392, something like that. Let me look. Yeah, $392,000. And so with that, your current payoff is $392. At the same time here in Colorado, and I had to double, triple check just to make sure, because I was like, I know appreciation has been solid. Obviously that's stagnating a little bit now, but the historical 5-year average for appreciation in Colorado is 8%. That's 40%. And what that looks like is, now that house you bought for $550,000 is $770, somewhere in there. If you take out what you owe with your prorations for taxes and stuff like that, and then your agent co-op, you're walking out with about $300,000 to $325,000 that you could put into a newer home, maybe more amenities, more upgrades, more things that you like. So instead of just letting the equity sit in your home, you're using it. And the biggest thing when it comes to home equity, it's phantom money. It's not real money until either you cash out, refinance, or you sell it and harvest the proceeds. At that point, it becomes real. And then you can use it to grow, to better your family, to buy a smaller house, buy a larger house. It's worth having a discussion with a professional to make sure that you're not missing an opportunity. This isn't a FOMO moment, fear of missing out. No, it's more about empowering you to have full knowledge of your biggest asset, which is your home. How can you use your asset to empower you and benefit you and your family? And so that's why I came up just trying to see if we can break this logjam that we as an industry have been in for almost 4 years, since July of 2022, when inflation really hit the mortgage interest rate extremely hard. It went from 3.25%, 3.5% on a Friday, July 22nd, and then all of a sudden it was 6.5% in 3 days, a week. That's unheard of. Historically, the trending and the trajectory of mortgage rates is a slow, either increase or decrease, but not that sort of volatility in a short window, which I think froze everybody. It just froze our industry. And it made people just, as they say, they have golden handcuffs now because they're stuck on this interest rate. Is that a viable point? Absolutely. But that's why if you wanted to move, you wanted to change neighborhoods, you wanted to go to a different part of the state that you're in. What does that look like? And it's just a matter of talking to a professional, whether you have an agent that you talk to and even the mortgage lender, and have them run. It's just a matter of becoming self-educated and gaining knowledge so you're not in an unfamiliar position. Just so you know exactly what things look like for you and your family, and to see if it's worth proceeding or saying, you know what, I'm good. I'm going to stay where I'm at because I'm in a great position, which is absolutely fantastic. But like I said, I just wanted to come up and present an idea. And this, I sent this out to a bunch of people, but I also have this on my website that you can go through and look at the example and see if it resonates with you or if it matches what your plan is or what you're thinking, and see if it's going to be beneficial to you. So I just wanted to put this out there just so you become fully empowered with knowledge and understanding of what is happening, just so you can make the best decision for you and your family. Once again, I'm Brandon Rearick with the For Sale team at eXp, and I hope this finds you well and provides you some information and knowledge that you can make the best choice for you guys. Have an amazing day. Take care. Bye.